Citizenship. It seems like a simple evaluation right there. Either they're a U.S. citizen or a non-U.S. citizen. But it could be very well an inquiry you have to make at times. For employees, citizenship is identified on the I-9, and Kate talked about E-Verify. But we actually have a form available, and hopefully everybody's using it. If you're wondering about how to gather information, how to make some of these evaluations, this form can walk you through the process. So this is a screenshot of the front page of the Request for Alien Information form. You'll notice it says Request for Alien Information for Employees and Fellows. There's also one for employees and fellows are tied to our payroll processing side. There's also one available on the AP procedures also, and it says miscellaneous income for those. So on the AP side, it's our independent contractors, rents, royalties, or our participant stipends. The front page of this form, and what's key is for a lot of determinations, is the date the person entered the U.S., and it doesn't have to be the date they came to work or do things with us. It's the date they entered the U.S., so it counts into something we'll see later on, counting days, and the visa type code. So obviously we want to gather as much information as we want, or we need here, but these are some of the basic information we're going to need for a non-citizen situation. This information can then be, on the payroll side, there's a place to actually enter the information. On the AP side, you'd hold that form for your documentation. So when we talk about IRS residency for tax purpose, there are 4 types of residency for tax purpose. One is a U.S. citizen, which we kind of talked about as somewhat simple. Then there's permanent residence, or a permanent resident, which is actually an individual who has a green card. Resident aliens, and again, this is all for tax purposes. Resident aliens, and this is what's called meeting the SPT test. And then there's a class for non-resident aliens. And one of the things that makes this confusing really is the resident aliens that meet the SPT test, because you get into a whole bunch of days counting. But when we talk about a non-citizen really takes in those last 3 bullets: the permanent resident, the resident alien, and the non-resident alien. Later you'll see how that shifts again when we get to tax and reporting. Yeah. And again, this is IRS tax status, not immigration. So you need to talk, or Kate's going to talk a little bit about making sure it's eligible for payment, things of that sort.
Yeah, so to add, another layer, as we've seen throughout the presentation, the determination of taxation doesn't stand alone. It goes with the payment classification, and then this is another area. So with the visa type, you would still need to be looking at that and say, are they eligible to receive that kind of payment with that visa type? So a primary example would be an independent contractor may come through. If they're an H-1B specialty worker, they're not eligible to be an independent contractor. So that might stop in the tracks any further determination on the taxation. So of course your first step would be to determine that they're eligible for that kind of payment with that kind of visa status.
And that's a perfect example of how we've talked about we're working on the basics here. That's a great example, but every scenario is going to have an interesting, we've seen them, so every scenario is going to have an interesting twist to it, and then you have to actually look at how's that work, how's that visa work based upon the activity they're doing, are they even eligible to actually receive the payments? And that would even before that's even more important, even before we get into residency purposes and taxes and all that. If they're not eligible to receive the payments, then that's a problem at the very beginning. Mm-hmm. So to kind of stress why the IRS residency for tax is important, NRA taxation rules are far more complicated than U.S. citizen rules. Typically, when we pay a U.S. citizen independent contractor, it's kind of like we're not required to withhold. We report it on a 1099. But with a non-resident alien, the general rule is always, it starts with that 30% withholding is required. Now, there may be exceptions to that, but so there's a tax impact right off the bat. So we need to make sure that we've got things lined up and we're going to process correctly. And
this is the kind of thing that if there's PIs out there, if they take one thing away from this is you don't want to find yourself in a situation where somebody was expecting $1,500 and they got $1,000, and then without being warned that it was going to happen. It can cause embarrassment for the PI, but also even for the person that's visiting. And so that's usually probably the biggest gotcha. The most common thing that happens is someone was expecting a certain dollar amount and didn't know that taxes were going to get taken out.
And it's a great point. When I talk to people on the phone sometimes providing guidance, I usually kind of say, well, if you know they're a non-U.S. citizen, then I like to say, well, there should be a stop sign for a second to say, okay, wait, I've got to take some time and we've got to get more information, make sure of the residency for tax before we process.
And some of it can be something as picky as, do we have a tax treaty with that country? And so a PI might successfully pay somebody 10 times, and that 11th person gets hit with the tax.
Right. And we're going to talk about how that can be different with tax treaties later.
Yeah.
So one of the things that happens with 1099 reporting in U.S. citizens is there is thresholds for things like, I mentioned, a $600 threshold for independent contractors and things like that. When you're talking about non-resident alien, it's all reportable. There are no thresholds, and it goes on a 1042-S. So you're actually going to see this slide later when we get into the tax impacts, but you might remember I kind of mentioned how it kind of shifts when we get to tax rules. So before I mentioned that the permanent resident alien and the non-resident alien are non-citizens, but when we get to tax rules, if a person's a permanent resident or resident alien, they're actually going to fall under the U.S. citizen tax rules. So that's why it's important to understand that. We're going to cover that when we get to tax and reporting. The biggest challenge really is the substantial presence test, that resident alien meeting the SPT test. The reason it's kind of the reason it is challenging is because it's a complicated calculation. It's based on a 3-year look-back period, and you're taking percentages of each second 2-3 years prior, but it's based on the whole time the individual's been in the United States when you get to the counting of days. And of course, to complicate it even more, and this is still just high level on substantial presence, when they're an F or J1 visa, they're actually exempt from the SPT test. So that creates another layer. So many times people call me and say, how would I walk through this test? So,
And when you say exempt from the SPT test, do you mean they get the taxation as if they already met the test, or?
Great, I'm glad you asked that. I actually didn't put that in the notes, but it's only exemption from the SPT test. It doesn't tie directly to income tax exemption. Actually, we're gonna mention something about Social Security, and it does tie to the residency to Social Security tax on the non-citizen status. Great question. So instead of trying to elaborate the detail by detail, this is actually another link that when you're in the model tool I was talking about on our external website, this is a link in there. It'll talk about substantial presence tests, and this is the actual definition on the IRS page. So it actually, you'll see 1 and 2 on the side there. First thing is they actually have to be in the country for 31 days. And then it goes into an 183-day test over a 3-day look-back period, I'd like to say, because if you look down at the bullets below, it'll say all the days of the present year, a third of the days that you were present in the year before that, and then a sixth of the days present in the year before that. The 183-day significance is basically it's a half a year. So the IRS rule in this case, as complicated as it is really looking on a 3-year period. Have you been in the country at least a half a year? Then they say, okay, you are a resident alien for tax purposes, so now you're subject to U.S. tax rules. So to show that this, we have forms and tools available, I'm back to the request for alien information form. This is actually page 2. And test 1, test 2, test 3, we're actually going to show on the next slide. This is basically walking a person through the substantial presence test. The Research Foundation is ultimately responsible for that determination, but a person can certainly fill this out. If they don't, then we can utilize this test for that purpose. So the first test is actually whether it's a permanent resident. The second test goes into the F and J visa exemption. The third test, as you can see, gets into rows and columns of actually counting the days. And at the bottom of the form, the person would actually mark, or you would set as they are a resident alien or a non-resident alien.